This one candlestick closure has made me over 6 figures in trading. I never enter my trades without it. In this video, I'm gonna show you step by step how I use it in the markets every single day to make consistent profits. With that being said, let's get into the video. In order for us to understand candle closures, about the breakout structures, we have to understand the basics of the candlesticks. How do the candles operate and work? The way that the bearish candle operates is that it starts to open at the top and it closes at the bottom. So that's how we literally confirm that the candle is bearish, because we do not know that immediately when it starts to move. Once it actually closes, that's when we know that it's a bearish candlestick. And we have to understand that in candlestick there's two parts. There's the wick, which is the small part of the candle, and there's the body of the candle, which is literally the candle, okay? So wicks is literally telling us where the candle was. This is the highest point where the bearish candle was, and this is the lowest point where the bearish candle was. And this is where it actually opened, and this is where it closed. And the up candle, the bullish candle right here, the green candle, we have to understand this also has two parts. There's the wicks and body, right? Wicks tells us where the candle was. This is the highest point it was, and this is the lowest point the candle was moving, right? And this is where the candle is currently. Bullish candle opens at the bottom and closes at the top. This is just how these candlesticks operate. Do not overcomplicate it. We just need to know where the candle is right now. With these candle closures, with the breakout structure, we need to be focused on the body of the candle, okay? Because this is where the candle is right now. The wick just tells us the history. Obviously, we're gonna be choosing right here these candlesticks. This is how you see the actual breakout structure, because I mean, you could potentially see it with the lines, etc., but it's a lot easier with these candlesticks. And with this candle closure, with the breakout structures, we can essentially enter in the market trend. How do these markets operate? It moves in trends. There's the uptrend. It moves in high highs, high lows, high highs, high lows, high highs. The downtrend moves in low lows, low highs, low lows, low highs, low lows. This is very consistent. And as you can see, it kind of moves like in patterns sort of way. Impulse, retracement, and impulse, right? In the downtrend, there's also the impulse, retracement, impulse, retracement, impulse. Every time that there's an impulse and a retracement, a high appears. And you're gonna mark out the most recent high like this. And when the up candle in the uptrend, when the up candle closes above that, the body, remember, the body of the up candle closes above the most recent high, that's a breakout structure, aka the candle closure above the high. That's what we want to see. That's the confirmation to essentially buy in the uptrend. So this is a BOS, breakout structure. That's how we see that. It happens in here as well. That's why we need to understand that there's the impulse and retracement. This is the high, and when the body of the up candle closes above the most recent high, that's a breakout structure, right? This is why it's so important for us to understand these breakout structures, because these allow us to enter, these allow us to see the trend getting respected. We can also use it to see the bias of the trend, a lot of different stuff. What is this? This is a breakout structure. Why? Because this down candle body, remember the body of the down candle, not the wick, the body of the down candle closes below the most recent low. That's a breakout structure. Look at this again. This is a impulse, retracement, and impulse. This is a breakout structure. We're gonna be focused on the body of the candles, not the wicks, the body when we're focused on the candle closure, the breakout structure, right? If you guys remember how high appears, a high appears when there's an up candle followed by a down candle. That's how the high appears. Now, a breakout structure appears when there's this body of the up candle closes above the most recent high. That's a breakout structure like this. This is the candle closure. Okay, and right here, if we're currently in an uptrend, if the price was moving nicely in an uptrend, we could potentially buy in here, put the stop loss below the most recent higher low, higher high, higher low, and enter like this. That's how we see the breakout structure to the upside. This is a bullish breakout structure, right? Guys, do you see this? This is very simple. It's very, very simple. We need to spot the most recent high and a breakout structure, right? And obviously, if this is a continuous trend, we could just buy in here, right? If this was a continuous trend to the downside and this breakout structure happened, we can just potentially enter shorts to the downside like this. Follow the market trend to the downside, right? I'm gonna give you an example how I follow the trend with these candle closures, with these breakout structures in the trend. Right here, we'll literally start to move again in low lows, low highs, low lows. We want to see that consistent movement. And remember, what do we also need to see? We need to see those break-off structures so we can enter. Look at this. This is a break-off structure to the downside, because this is the most recent low, down candle followed by an up candle, that then gets breaking below by the body of the down candle. I mean, just for the example, let's see what happens. Okay, there we go. As you can see, this is just example, okay? This was kind of like a scalp trade, very, very low in risk-reward ratio size. We need to see that candle closure, that break of structure before we enter, because that confirms that the trend is getting respected and that it's valid, okay? If I would miss this trade right here, I could potentially also enter in the retracement to get a better risk-reward ratio. I would also see another break of structure to see if the trend still gets respected. So this is a low, this is the most recent low. We're going to be focused on the most recent lows for the break of structures. As you see, this is not the most recent low anymore. This is the most recent low, because now this is a down candle followed by an up candle. So this is the most recent low right here, and as you see, it quite frankly got breaking below by this body of the down candle. So this is now our break of structure to the downside. I could potentially enter right here, see what happens. Boom. As you can see, how does the market move? In low lows, low highs, low lows, low highs, low lows, low highs, low lows. That's the trend. And let me show you guys in the uptrend as well, because I cannot just teach in one way, because there's sometimes the market moves down, sometimes this moves up. We want to see those break of structures, those candle closures, those respect of the trend, right? So in this case, if I want to look for buys, I want to see that break of structure, right? And immediately what do we have? We have, look at this, an up candle followed by a down candle. So this is a high, and the body of the green candle, the body of the up candle closed above that. Remember, body of the candle closed above the most recent high. So that's quite frankly our break of structure to the upside. Hypothetically, I could enter. So this would give us a 1 to 2 risk to reward ratio. Let's see what would happen. Okay. So as you can see, guys, it respects the trend by moving in higher highs, higher lows, higher highs, higher lows, higher highs. And again, let's say if I would miss that trade, I could have potentially also entered from the retracement to get a better risk-reward ratio. Here I could also buy, because this is another high, the most recent high, getting breaking above the body of the up candle. And this is a perfect example, something that is not a break of structure. This is literally just a wick of the candle, wicking the high. This is not a break of structure, remember? That's a wick, but this is a body of the candle that closes above that, right? We have to understand these closures. We have to understand the closures, guys. It's very important. We want to target areas that could switch the direction. Now you know how I enter my trades, but let's be honest, that's not enough. You need to know about liquidity, about market structure, etc. Don't worry at all, because I have a gift for you since you made it this far. Click the first link in the description. It will take you to my free trading course that's over 1 hour long, and that's all you need to become profitable. Okay, click that link, comment down below, and as usual, I will see you on the other side. Peace out.